Hey everybody, welcome in. Happy Saturday morning. Let's see what's going on in the market, and we'll give you a quick update about a whole bunch of weird observations which I'll share with you all. So let's just, as usual, jump in. Math, money, and freedom. And of course, this is Edutainment. Thank God I have this. I don't have to click my little clicker. So let's jump in and try finding exactly what's going on. So good news out of China. This guy, the assistant director of the International Chinese Money Institute, said, if Bitcoin goes up, we're all going to die. So that's wonderful. The shit that comes out of China these days is ridiculous. Anyway, a little bit of sad news out of Turkey. The financial system just collapsed. But a couple of key points to note here is, first of all, the Erdoganomics, the president's economics, extremely low interest rates, a lot of money printing, very high inflation. Well, everything just collapsed. So the currency just fell another 54% so far this year, and real inflation rates are at about 21%. Remember, the US is about a third of that. In fact, if you take into account the real inflation rate, it'll be more like 15% or more. So it just shows you exactly what can happen when monetary policy gets out of control. And I'm going to work on something for early next week, just to give everybody a State of the Union as to where we are with monetary policy, interest rates, inflation, tapering, and what it all means for the whole world and you guys. Next one, let's talk about Bitcoin. We have been flat for 14 and a half days, hovering around this $47,000 mark. And for this to be so stable and so concentrated at this level, it tells me something weird is going on. Now, the week we had, obviously, there was a bit of a relief rally after the Federal Reserve's policy decision. Cryptocurrencies, after that, got hammered along with stocks because the new Omicron variant is ripping through the world at a very fast pace. And short-term volatility has come to define, obviously, crypto trading. But year-end tax positioning may be playing a role. So I'll talk a bit more about that as well as we get in. But right now, the most important thing to look at this chart is we are hovering at that 200-day moving average, which is an important level to hold. Now, Puell multiple, you've heard me talk about this before. It indicates that we aren't even half done yet. So I know it can be a very frustrating time for everybody out there. It's like, where's the rally, etc.? Why are we so stagnant? But the fact that we are stagnant is actually a very good sign. Now, the Puell multiple looks at Bitcoin mining and indicates when miners are heavy in profit and likely to sell. And this is top of the last two cycles. And right now, miners are not interested in selling. The world has changed and there's so little supply. Speaking of supply, the drainage continues. The exchange net position indicates that exchanges are not holding large amounts of Bitcoin currently at all. This suggests that institutions, organizations, retailers are buying and holding Bitcoin. Again, there is no sign here that whales, etc., are moving crypto to exchange to dump it. And that's a very, very important thing. In fact, they continue to accumulate. Now let's talk about Tether. And there's a huge spike of Tether on exchanges. It's risen 22.5% over the last couple of months. And this supply converts to about $10 billion. And this typically indicates that this Tether amount is kind of there sitting on the sideline, ready to pounce and buy Bitcoin or crypto. So again, very, very bullish sign from sentiment there. And let's talk a little bit about the key ratio of Ethereum to Bitcoin. We, for the first time that I know of, we just went outside the Bollinger Band. Now, despite the issues with Ethereum, many believe that the risk-reward ratio of all crypto assets at the moment, Ethereum is the safest. And per this chart, even assuming that Bitcoin stays at 50K, Ethereum could easily hit my bull run target, which is out to March of next year of 8,900. And that would be at about a 0.15 ratio. Now, remember, when we look at Ethereum, and that red line at the top of that chart indicates where we could potentially go based on historic ratios. Now, DeFi is on fire, NFTs are on fire, DAOs are on fire. They all have huge addressable markets, and they're still extremely early in their adoption. And Ethereum is the 800-pound gorilla. The broad scale of Ethereum network could capture a lot of this as we go forward into the whole decentralized Web 3.0 value in the future. And also remember the EIP 1559 And proof of stake will continue to drain exchange reserves of Ethereum as we go forward. So this is very bullish, but there's a twist. Now, unlike Bitcoin moving off exchanges, Ethereum is moving onto exchanges, which could indicate some sell pressure. And a big thank you to Sanjay for sending me this article. Now, over the past few days, we're seeing a large spikes in Ethereum supply and exchanges. And that means there could be a little bit of dumpage. And it looks like the sellers are using every price pump to exit their positions where possible, especially if they missed a chance to do it previously. So it's like a kind of a lockstep thing. You can see that when you look at the charts and some of the weird behavior that Ethereum has right now. It takes a run at 4,500, gets sold, comes back under 4,000. Another run at 4,500, gets sold, comes back. So we might see more of that. Now let's talk about some weird thing that did happen. The second largest Ethereum whale actually converted some of their assets to buy MATIC and the Graph. And this was extremely substantial buys. I think 4 million and 3 million respectively, or 4.8 million of Polygon and 3 or 4 million of the Graph. Now, they must see something in these assets that I don't. For example, you guys know I'm a very big fan of Polygon, but the Graph, never. Not so much. Let's look at why. First of all, we'll look at the chart. Year-to-date return for the Graph is 0. That's not very good. And the other thing that you guys have to be aware of is we use our quant model to identify if something is good, bad, or indifferent. And all year, everybody said, look at the Graph, look at the Graph. And yeah, it did spike, and then it came right back down to earth because it is a very poor Compendium score. And glad to see the model works yet again. But that score of 4.2 means it's in the bottom 42% of the top 300 cryptos based on regulatory risk, tokenomics, inflation, all that type of stuff. So let's look at what Polygon did in the same time frame. While the Graph was flat at 0 return, Polygon 18,000% return. So good times all around for anybody who holds MATIC, and it's taking another run. So we'll see what happens. It'll be interesting to see. Maybe there could be a spike in the Graph after all, after this big move. But if they have so much money, they're investing in one winner, maybe there's something to the Graph. So I'll see what I can undig and find out as well. Now, another good news as well from Wu Blockchain, UNIswap will be deployed on MATIC over the next few days. Woohoo! We hinted at this in my video, Should I Sell UNIswap, a few days ago. And here we are. It's actually happening, which is great. Now let's talk about another thing that could be putting a lid on the market as to why everything is kind of so flat. So starting in 2022, the IRS may shut down the long-time tax loophole that allows cryptocurrency investors to harvest their losses to offset their tax burden. And a lot of you asked me to dig more into exactly what this could mean. So I'll give you an example here. This is ICP. It's a fantastic name. No, that's complete sarcasm, of course. You know I hate it. It's down 96.5% over the last, let me see how many days that is. 100 and whatever, 6 months or whatever it is. I don't even look at it that much, but I thought it'd be interesting to show exactly what it could mean for tax loss harvesting. So here's an example. You buy 100 tokens at $632, which was the price not too long ago, 6 months ago or less. Cost $63,200. Your return to date, year to date, is minus 96.47%. That minus is should be on the next line. Now, the tax loss you can harvest from selling this now is call it $61,000. And that means from your $63,000 investment, you will get $2,000 back. But you can sell this, take the loss, apply it against your gains, or plow the $2,000 back into ICP and hope that it'll return. Of course, it's not going to. Again, tokenomics also suck. So other tax loss examples of what's going on. This is a cool thing as well. This is from ruggedhard.eth. And it's a way of harvesting tax loss. You can send your worthless NFTs to taxlossharvest.eth. So you can realize your losses for the 2021 tax year. So it's just another way of taking a hit if you do need to offset some gains. But then again, if your NFT is worth nothing, it might come back. So you don't necessarily want to burn it or send it away. So especially for nothing. But take that as just an illustration as we go forward. So let's talk a little bit about the Motley Fool. Yes, they came out with an article and they said 3 hours ago. Better buy Shiba Inu or Solana in a showdown. I mean, sometimes I get a little bit frustrated with traditional finance journals and everything else, like Fortune magazine and Motley Fool. But this was just one of the dumbest things I've ever seen. And their summary of their article, like, first of all, why would they compare two assets like this? It makes no sense. One is a stupid meme coin, which is losing everybody a ton of money, and the other one is going to revolutionize the world. But anyway, their net take was investors willing to take on risk in pursuit of short-term capital gains might still be able to score wins with the SHIB token. I mean, people should just go sue these guys for saying such, fooling people to think there's money to be made in Shiba Inu. It's just, how many hundreds of thousands or millions of people read their journal and take action. They did talk about Solana building functionality. But I mean, it was just a weird line. Anyway, let's look at the SHIB chart. Oh, it's down 66% in 50 days. Okay. Is it going to rebound? I don't know, but a lot of people are hurting. Now, the other cool news is this: the holiday season is coming in and people are beginning to give the gift to crypto. I spoke about this. I tweeted this, I think, this time last year. And I spoke about giving the gift of crypto for Valentine's as well on February 14th. But according to a BlockFi survey, they said 1 in 10 Americans are planning to give some type of cryptocurrency as a holiday gift this season. People want to make money. They don't want another pair of socks or a sweater or something they may never use, like a scented candle. But they'd much prefer a couple of tokens. So anyway, that was from ABC, which I thought was very interesting. And with that, let's see. Hope you like the content. Very quick one today. Some interesting things going on in the market. Market stagnant. Bitcoin still hovering around that 47K mark. But some of the other things were kind of cool. And we have some names. Luna on fire. Silica moving. Chainlink coming alive a little bit. And a few other good names too. So hang tight, everybody. It's going to be probably another bumpy weekend. But I do believe we could have a little surprise on Sunday. Anyway, I'll talk to you tomorrow for Q&A. Thanks all.